the anatomy of candlesticks. Okay, so notice here, now every single thing in a candlestick means something. If you just look at it right away, I can tell what is going on, and that's what you need to understand. That's what you need to know. It's gonna completely revolutionize your understanding of candlestick charts. It's very, very important. Okay, so we're gonna go in. I'm gonna give us some extra time here. So there are two candlesticks right now. By just looking at it, green and red, the green if it's green, it looks exactly the same, right? These look exactly the same. The only difference is that one is green and one is red. Now what that means is that if it's green, it means that when the stock price opened up on that particular candle, it opened up below. This was the opening price and this was the closing price. Okay, that's why it's green, because it means that the price that it closed at was higher than the price it opened at. So this is the open price and this is the close price. Now similarly, if it's red candles, exact same look of the candle, right? It has body, wicks, yet this means the completely opposite. It means that the price opened at this area and it closed at this area, and that is why the color is red. So that's what the color means. If it's green, it means it opened up here and it closed here. If it's red, it means that it opened up higher but it closed lower. That's why the color is red. That's number one. That's what you find out from the color. Number two is that the candlestick. So let's look at this candlestick right here. Okay, it has these part. Number one part is the wick. It's called the wick. Okay, this line is a wick. Same thing, it has wick here. The other part is the body. Okay, so these are the two really parts of the candlestick: body and the wick. Okay, now each means very, very something different. What that means is that the price opened up here because it's green, so it opened up here. This is at the start of the body. That's when the price opened up. Okay, it dipped down. It came down. So this was the lowest of that candle price it ever went down to. This is the price it went down to. And then it went up all the way here as well. But eventually it came down and then it closed here. Okay. Now, when we say close, what does that mean? Close means that each candle, it can represent a time frame. We're gonna go time frame in detail, but a time frame, it could be daily chart, it could be daily candle, it could be 1 minute candle, it could be 15 minute, 20 minute, any minutes you want. It could be daily, it could be weekly. What that means is that if this candle is, let's say that this candle is daily, what means that the whole action happened throughout the whole day. So we're gonna talk about daily for now until we go through the time frames on the candles. But for now, we're going to say that this candle represents the price action of one day. So when the market opened, it opened up here. It closed up here. However, it went down all the way. The price went down all the way here, but people bought it. And it went up all the way up here. And eventually it closed here. Okay? Eventually closed right here. So that's what it means. Now, simply on the red side, if the market, let's say that the price when the stock market opened, or the crypto market, whatever the market opened, and the price opened here, but it went down, kept going down, and the price went up again. Okay, maybe it went up like this, and then it came down, eventually closed right here. So this is the body. Okay, because that's where it opened, that's where it closed, and then this is the price went down and it came back up, went down, went up, and came back. So that's the overall anatomy of a candlestick. Now, candlesticks could be in different kinds of sizes, shapes, and forms. And that's what tells you about how the buyers are doing it. So we're going to go in more, and exactly I'm going to tell you the psychology behind it, okay? The psychology behind it. So let's get started. Let's look at now that we understand the basic anatomy of a candlestick, why the different colors, how the body is formed. Okay, we're going to look at different kinds of candlesticks. Now, I'm not going to go to all kinds of candlesticks, but I'm going to talk about the main important ones. Once you understand, you can understand all different kinds of candlesticks, okay? And it'll all make sense to you. So let's get started. Let's go next. All right, so the number one view here, there are a doji candle, right? A doji is basically it's right in the middle. Okay, the open and close are nearly equal, and this what really means that the stock opened up here, okay, if it's green, and it closed here, right? It opened here, it closed here, it went up, it came down, and it came down right in the middle. It closed right in the middle. What that means, there's a lot of indecision. That's what it means, right? Because if it goes up and it goes down and it comes back right in the middle, what does that mean? It's telling us something. What it's telling is that buyers and the price is just probably at a very average price right now, and nobody wants to pay more, nobody wants to pay less. It's a good average decent price. It's not highly priced, it's not very low priced, okay? And that's at that particular moment. That's what really means, okay? Now this normally, what does that mean? Normally this happens, you see this on especially on a daily, on a whole day of candle, normally when there's a news pending. You know, if there's a news coming, probably news tomorrow, there's KPI data coming or Fed speaking the next day, you will see these kind of candles. What basically that means that the buyers and sellers are waiting. They're just not making any decision at the moment. They're waiting and seeing, okay, what's gonna happen. Let's just wait. So let's just not buy, let's just not sell, and that's when you see these kind of candles. Okay, now when that happens, you'd all, you know, now when I think about it, I don't want to make decision at the moment. I want to wait. Let's not just go too far right now. Let's just keep talking about candlesticks, but I want you to think like that. I want you to think, when you see candlesticks, I want you to think, okay, what would this mean? And what are people are doing? So when you look at it, you will see people, okay? You're seeing emotions. You're seeing what other people are thinking. And based on that, you're going to make a decision. So that's what I'm trying to tell you. So let's look at another one. Hammer candle, I'm sure you know already about it. If you're brand new, well, hammer candlesticks, now we're talking. Now look, this is another candlesticks, but it just means completely different, okay? This is a very important, very important in the trading sector, okay? It could be stocks, it could be crypto, whatever, but this is a very important thing to know. Now what that means is the price, let's say if it's a green candle, right? The price opened here and it closed here. That's why it's green. This is wrong. But the price opened here, okay? So it was an open. It opened here, it closed here. However, look what happened. It came down all the way to this level and it brought right back up and it closed up on top. What does that mean? When the price opens up here, people sold it when people sell, but as soon as they sell, people came in and bought very aggressively. So when this means that the buyers or whatever the stock is, the price is, people are very confident that it's gonna go up. That's why more and more people buying. Okay, that's why the price is not staying down here. It keeps buying up. So it's a very important. That's what I was telling you. Okay. So it's called hammer candle, shooting star candle. Has different names, but hammer is one of the most. Why? But it looks like a hammer, right? It looks like a hammer. You can hammer something, so it looks like a hammer. So that's why it's hammer. Very important. Let's look at next candle. Now, similarly to hammer, but it's called inverted hammer. Another very important. This is when the price is very weak. So what that means is that the stock price went up, like here. So the price opened. The price opened here. It went up. People sold it back. Okay, people sold it back. And what that means is that the price is very bearish, which means very negative, because whenever you see the wicks, it means people are desperate to sell or to buy. If the wicks, if it's like this, people are desperate to buy. If the wick is opposite, people are desperate to sell. Okay, so it's a very important. The wicks are the most important part, I believe, because this has saved me a lot of money. Especially when I have a very high position and I see lots of wicks down, lots of wicks. I mean, I'm seeing a lot of people want to sell. Let me get out. Okay, let's look at next one. here. All right, so another very important is the engulfing candle. So what is engulfing? Engulfing, what that means, engulfed, something got engulfed, right? And that's where the name came from. So this candle right here, green candle, is an engulfing candle. Why? Because it engulfed the previous candle. Okay, so notice here the stock price going down, 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 down. Okay, and then this candle was completely covered, taken over by this. This is way bigger, completely taken over, right? The whole body. Now, when this happens, what do you think that means? It means that everybody who sold in it, all of these shares were bought over. So that means a very strong. So normally it's like a reversal pattern. So when you see something like this engulfing, if I see an engulfing, it means that the stock is probably gonna go on the other direction. So if it's going down and the last candle gets engulfed, boom, on the opposite side. Again, you don't have to learn anything right now. Don't worry about any of that. But I want you to just think like that. Okay, I want you to think like that. Sellers, they're selling. Eventually this one huge buyer comes in and engulfs all the sellers. You see all these sellers engulfed. So that means that changes the momentum. Now people are more confident buying, because when other people see this, they all start buying, which causes another effect of uptrend. Okay, so engulfing, very important. Now there are tons of other patterns, but these are the main ones. Now that you understand, okay, what the candlestick do and what it means, each of this, the anatomy of it. So let's look at it here and understand. So this, what does this mean? This means the price opened up here, okay, right here. It opened up right here. This is, and it closed here. What does that mean? That as soon as the price opened, people kept buying. Nobody sold. There's no wick right here. You see there's no wick here. What does that mean? Nobody sold the price. Nobody sold it. So when that happens, it's a very strong, very bullish signal. So this is the most bullish candle you'll see if it has no wicks, up or down. Okay, very strong. Again, what this means, people bought here when the price opened right here, and people just kept buying until the day ended. The price closed right here. Nobody sold it. Okay. Now, the second one is the second most bullish candle is this. The stock price opened here. There were sellers who sold, but then there were all the people waiting to buy, and boom, they bought, and then they closed the price right here. So where it opened, it came down and it went up, kept going up and up, even not where it opened up. It kept going even further, and it closed here. That's what it calls a hammer. So when you see a hammer, it's a very another bullish. Now this one is a doji one that we just talked about. Same thing, very neutral. Okay, same thing right here. Comes down, goes up, eventually closes in the middle, which means it's a neutral. Same thing, another neutral. Okay. And the last is the least bullish. The reason why, now normally this is a bearish candle, okay, because the stock went up and people sold it back, but because it opened right here, it opened here and it closed here, so it means that people are not that scared to sell because it's still closed above where it opened, right? That's why it's least bullish, but still considered as bullish. Whereas on the other side, red is completely the opposite. Okay, this is the most bearish, second bearish, same thing, exactly the same thing. Okay, now if you understand all of these, that's all it is. Let's just move on. That's all you need to know about candlesticks, because this is not the end. It is just one of the tools to understand the price action. We're gonna learn next steps. We're gonna learn a lot more, and that's when you combine all of these together, that's when you're just gonna start seeing everything. And basically the key takeaway is that candlesticks reveal real-time buyer and seller strength. It tells you what people are thinking, how, if they're panicking or they're not panicking, if they are just waiting, which is the doji candle, if they're very aggressive, which is in the engulfing or the hammer candles. Okay, and once you learn to read them, you gain a very serious trading edge.